Good morning, traders. It's the 28th of February, last trading day of the month. We've made it to the end of another month. Hope everybody's doing well. I'm
Woohoo!
Joe, joined by Steve. Good morning, Steve. How are you?
Yeah, not bad, mate. Not bad. Yeah, last day of the month. February just whizzed by.
Often
It's
does because
almost
it's got a bit
like,
shorter.
yeah, we blinked and it's gone.
Yeah,
Really strange. So, yeah, onwards and upwards.
indeed. Okay, so let's crack on
You look
with
a bit cold
today's.
there, Joe,
It is cold today. It's like 2 degrees in here, so I needed to get my coat
in
on.
your ice box.
Yeah. Someone commented yesterday about my haircut, saying it must be warmer in the trading shack because I'd had a bit of
Yeah.
shearing done. Sadly, not the case. It is freezing in here. Probably need a woolly hat as well. Okay, so it's the last trading day of the month. Guys, if anybody is watching the stream this morning and wants opinions on markets, it is expected to be a bit choppy today. It often is at the last trading day of the month as banks, hedge funds, people within the market position themselves to close out, to dress their accounts based on how they perform throughout the month. So we're going to get into the latest headlines. There aren't a lot today, actually, and then take a look at how markets are shaping up for month end and what we can expect for the rest of the week. So first up, US durable goods orders dipped yesterday. The goods orders declined 4.5% for January after a revised 5.1% increase the previous month, and this is also slightly weaker than the consensus forecast. Underlying orders increased 0.7% after a 0.4% decline in the previous month. The Fed rhetoric is little changed. One of the governors rejected the arguments for raising inflation target above 2%. On the short-term outlook, he commented that the recent data suggests that wage inflation pressure was easing, while the outlook for core services inflation is uncertain. As a result of all of this, risk appetite did attempt to recover yesterday. Wall Street equities managed to secure a tentative recovery and risk appetite was slightly more settled, but there were still important tensions and unease over global monetary policies. The dollar retreated slightly, but also recovered from those intraday lows. In terms of what's happening over the Brexit discussions, the Northern Ireland deal has been reached. In a press conference with EU Commission President Ursula von der Leyen, Prime Minister Sunak confirmed that there was a deal on the Northern Ireland Protocol with a new Windsor framework. There will also be hopes of a significant easing of trade frictions. And finally, month-end trading. Today, expected to be some position adjustment going on, and therefore the potential for choppy trading across currency markets, especially around the London fix. So that's it for the latest headlines. Not an awful lot. So, Steve, we can get straight into the charts and you can kick us off with a look at cryptocurrencies.
Okay, mate. I'll just share my screen and we'll dive into cryptocurrencies. As Joe, oh, platinum triggered. As Joe just said, we'll just take a look at the slightly shorter term charts. We sort of like know where we are on the daily chart. Just a quick review. We're in the midst of a correction from the rally up to the resistance at 25,400, and we've rejected from there in this like ABC type of correction. And we just posted a shooting star yesterday on the 4-hour chart. 4-hour chart, we can see we've broken through the support of the Ichimoku cloud. We've broken through this trend line as well that we set up. So it's reacted quite nicely from this, and we spiked above there, retested. Let's see if we can extend that right to see how it retested. Yeah, retested quite nicely on that reverse trend line and failed and moved lower. So under a little bit of pressure, 23,255 trading. Looks like we could be in that C leg. So we could have an A leg, B leg, C leg. So a little bit lower we're looking. Potentially all the way down to this range of 21,500 to 22,000. That would be a nice little symmetrical correction. Cover Ethereum very quickly. That's done the same. The shooting star candle, we can see the hours of 12 till 4 rejected after breaking through support. It's building up a nice a lot of resistance up here. 1730, obviously the key resistance in Bitcoin that we've highlighted, and breaking down in this ABC correction, probably, well, potentially major support coming in around about the 1500 level. And Ripple hasn't quite done the same. It's been under pressure. I'll quickly show you the daily chart where we've got this lovely trend line which has worked pretty well on multiple occasions. We're in the cloud. We're still negative. We're under all the major moving averages, the 55, the 100, the 200. The downward trending resistance line is doing a good job. You can see on multiple occasions from the swing high 23rd of September, we've seen 1, 2, 3, 4, 5. We call that a 6. It didn't quite get there, but that seemed to reject also nicely. So yeah, under pressure, a real support coming in at 36.30, and below that we've got we sort of like got 31.5 really as the next major support. Okay, I'm going to cover off commodities. I'm also going to cover off a little bit more detail on natural gas. Rice has requested that. We'll happy to cover it. So first of all, look at the gold. This is in a corrective phase. It's the from an Elliott wave perspective, it looks like we're in a fourth wave, ready for the fifth wave rally higher. We've yet to see that. We really need a lot of negative dollar price action for that to happen, or some sort of geopolitical tension build. So gold is currently correcting. For our chart, we are in quite a sort of like a decent downtrend now, and look like we're going to retest this 1800 to 1810 support level, or to be a bit more accurate, 1807. The rally yesterday stalled around 1820, so that'll be the first resistance if we do get a rally out of there. 1827, and there's multiple ones all the way up to 1850. So support, as you can see, we're approaching it now. This is at 1805, 1800, and also we've got a bearish flag that we projected a measured move target of 17, around about 1790. So on this chart, it's highlighted 1791, and also we've got 1788 as a 50% retracement of the whole up move. So gold looking pretty negative, under a little bit of pressure at the moment. Similar to silver, gun to head trade yesterday, it did work. We made a little bit out of it. Didn't quite hit the target, but we're on our way to the target now. I think the target was around about 2030, 2048 trading. Under pressure as we go into the European session, and a further downside expected now. Real resistance coming in around about the 2085 level, support down at 2020. Taking a look at crude oil, we've moved higher over the last couple of days. We can see from the rally last week that we stalled at 73.83 on the WTI, and we've had a nice little corrective rally. Resistance up above at 77.64, that's the closest one. Support down below at 73.85, which is last Thursday's swing low. Below that, 72.58. Obviously, we've got oil inventories tomorrow. That'll be a little bit more volatility creeping in. But at the moment, just a mild correction. From a technical perspective, we're still negative and still heading lower. Brent crude oil, similar sort of price action, obviously, but trading at a $6.30 premium to, or $6.23 premium to WTI crude oil. 84 the resistance in Brent crude oil. Above that, 86.70 and $89, and support coming in at 80.30, which was last Thursday's swing low. $79, 77.60 and 75.26. We've got on multiple support levels, and again, we just look like we're getting this bit of correction within the daily time frame. We're still negative, we're still bearish, we're still moving lower. Natural gas, at last, we're getting a bit of a rally out of it. Let's take a look at the weekly chart. We can see we've got this huge double top formation. The measured move formation, the measured move target for this was, I think it was negative, wasn't it, Joe? I think it was like below 0 or something. So let's take a look. 90 cents. That's the measured move target just from this chart here. That's just an estimate, so don't sort of like hang your hat on that. However, we have been very aware of this this gap in the chart that we had all the way back from sort of like December over to January. That was over a weekend, 436, and the high the following week was 413.70. So big gap in the charts, and you know, as a technical analyst, and you know, we tend to see these gaps getting filled, but sometimes when they do break away like this has done, it could take a lot longer. However, we've seen a little bit of stalling over the last month, I would say, really since the sort of like start of February. We saw like a nice week week of the 6th of February, nice positive week, and that was like the first one in 1, 2, 3, 4, 5, 6, 7, 8 weeks. And then we saw that give up those gains the following week. But this week looks a lot rosier. We seem to have put in a bottom around about 211 on nat gas, and we're breaking aggressively higher, taking out the bearish candles that we've had. So almost, if we were to combine these two candles, we've engulfed. It's like a bullish outside candle. So really looks positive on this as a reversal. Obviously, lots of work to do. Let's clean this up a little bit. We can see that from a automated Elliott wave strategy perspective, we're getting this 5 ways higher and the ABC correction lower, and then we have to settle down and wait for the next move. We've broken above the resistance which we had at 268, nicely above there. Real extension higher yesterday. We opened up higher, filled the gap, and pushed higher. So yeah, overall we're looking pretty positive. Further resistance probably around about 279, and other resistances we'll look at. Let's take a look at the 4-hour chart. 4-hour chart, we're broken nicely above the cloud, and we can sort of see around about $3 will also have good resistance, which will support. Once we break that support, we retested and continued the move lower. So overall, a nice little attempt at putting a bottom in. Now, this could end up being some sort of inverse head and shoulders, which would basically mean that we could still retest lower prices. But for me, as long as we maintain this positive price action above the 240 level, I would look for a deeper correction. We've come a long way in natural gas. So even a deeper correction wouldn't be, wouldn't be sort of like impacting the overall trend lower. Let's take a look and see where we could draw our Fibonacci lines in. This is the move we've had. We've now got a potential bottom in place. Draw the lines there. We've got a 38.2% Fibonacci retracement. Lines up perfectly with the gap fill. So 440. Still a long way to go before we get there. We've got like multiple moving averages to get through, multiple resistance levels to get through. It would require a really sort of like a big indication or big turnaround for this to happen. But the signs are there that we've got a decent potential risk reward trade on the cards for a more medium term trade, Joe, I think. Yeah, well, let's before I cover indices, let's walk through the FX, take a look at the dollar and see where the dollar's going to bully us today.
Yep, let's have a look then. So I'll go through the majors. I'll also go through a couple of other markets that I think are interesting as well as sterling Swiss. It's been requested by Mark. So first up, dollar index, we can see that yesterday we saw a bit of a turnaround, not quite an engulfing candle. We can see that we had a decent move higher on Friday. On Monday, we saw a reasonable pullback, but we didn't manage to engulf all of the gains that we posted on Friday. And we're pushing a bit higher today. So all in all, having broken out through this short-term downtrend, it looks as though we are still in corrective mode to the upside. Can't rule out a pullback to these sort of levels, 103.62, to retest this newly formed support before potentially rising towards that 38.2% Fibonacci retracement level, which is my kind of short to medium term target up at 106.15. Now, obviously, if the dollar is going to move higher, that is going to suggest that we're going to see weakness in equity markets, with risk appetite is going to dip because people are going to move into the dollar as a safe haven asset. So that's potentially still a possibility. And with it being month end as well, I wouldn't be surprised if we see some more defensive price action today and therefore maybe a bit more strength in the US dollar. So let's take a look at cable then. That's weaker today. Had a pretty decent day yesterday. Sterling holding up quite nicely as a result of this Northern Ireland protocol deal that's been sorted out finally, and seems to have found some support around 119.19. Still not ruling out the possibility that there is a potential double top forming here. In order to complete that pattern, we would need to see a break below this low here, which effectively is a neckline of that potential double top, which comes in at 118.42. But based on yesterday's price action, having held that support, maybe we could see a little bit of a move to the upside in the short term if there is going to be continued positivity towards sterling currencies. Let's take a look at Euro US dollar. Again, slightly weaker today. This has broken down through support at 106.48. Yesterday, we saw a bullish engulfing candle, so that's quite encouraging for the short term. Indicates that maybe we will see some strength in the euro versus the US dollar. Still eyeing up this 38.2% fib level as a potential downside target. But given that we've seen that bullish engulfing, we can't rule out a potential move to the upside. And let's just see if there's any kind of wedge formation taking shape here. Something along the lines of that. We did arguably see a break outside of that yesterday, coupled with that bullish engulfing. So that may trigger a bit of a move to the upside. So it's all in all quite mixed, really, quite choppy and difficult to call. But if you're looking for an opportunity, maybe there's one there on the long side to play Euro US dollar to around 108.85, which will probably coincide with that pullback to the dollar on the dollar index back to that support level that we mentioned. Let's just bring that up again. So back towards that kind of 103.62 level would probably coincide with that quite nicely. So maybe some opportunities there. Let's take a look at Aussie US dollar. That's weaker as well. The commodity currency is really getting a bit of a battering at the moment. I think if you're looking to trade anything in the foreign exchange space, then maybe selling Aussie dollar and selling New Zealand dollar is probably the way to go. They seem to be the most definitive trends that we have in this space at the minute. We can see here that Aussie dollar, although tried to post a bit of a bullish hammer yesterday, is back on the back foot again today, down almost 0.5% as things stand and edging ever closer to that 50% fib level, which is at 66.63. If that fails to hold, and we can see it was support here previously, then we may trigger further losses towards that 61.8% fib level. It's a similar situation in New Zealand dollar versus the US dollar. Completed a double top here. So really quite a nice technical pattern. Arguably, we saw a bit of support at that 38.2% fib level yesterday with an attempt at forming a hammer candle. But for me, it's looking quite top heavy, given that we've got this double top, which completed on Friday, and we're pushing lower today, down by 0.53% as things stand. So for me, that looks ripe for a pullback towards that 50% fib level at 60.25. Okay, let's take a look at dollar yen. Just wrap up the majors before I get onto the requests. So dollar yen, dollar continuing to move higher against the Japanese yen, weakness across the board in the yen currencies. We are now through that 38.2% fib level, although we haven't closed above it, so that may still act as a resistance level today. But all in all, this is looking pretty robust on the upside, following the break of the bearish channel and this consolidation triangle that we saw down here. Broken up, prices moving higher. Next stop is the 50% fib level at 139.58, providing we can see a close above this 38.2% fib level today. Dollar Swiss, bit of a reversal yesterday, but again, still looking pretty robust, given that we saw the break of this channel. Again, pullbacks could be limited to around this sort of region here, which is newly formed support around 92.90, before maybe a continued move higher towards that 38.2% fib level at 94.75. And dollar CAD, this is pretty range bound at the minute. These two kind of cancelling each other out. We did see arguably a bit of a base pattern or an inverse head and shoulders form here. Broke up through that level on the 21st of Feb, but into some resistance here between 136.82 to 137.00. So pretty choppy stuff in there. Okay, let's take a look at sterling Swiss, as we've got a request on that. So let's just first of all take account of the daily setup. So we can see here that prices have been kind of range bound within this descending or within this triangle pattern. We've got major supports between 110.48 to 109.97. So that appears to be doing a pretty good job of support, and buyers have been attracted in and around this level. And following the sort of rumours and then the confirmation of the Northern Ireland Protocol deal, we've seen a decent move to the upside in sterling, and the Swiss franc has been left behind. Where we can see these kind of lower highs marrying up is kind of in line with the short-term 78.6% fib level. So for me, it looks like we do potentially have a bit more upside available in this towards this kind of region at around 113.58. So it's looking pretty decent at the moment. It is obviously having a pretty good move to the upside in the short term, so that could run out of a bit of steam in the short term. And if we take a look at the intraday chart, so I just had a quick look at this. This is the hourly chart. So we can see that prices here were trading within a bullish channel. We then saw a pretty significant break of that back in late January, which triggered this corrective move. Then we saw some sideways price action before eventually completing what looks to be a short-term double bottom pattern. And that indicates that prices could move higher towards a measured move target of 113.74. So that is where I'd be targeting potentially for a reversal in this uptrend in the short term. So suggests that there is a decent bit of upside potential in the short term here. If we take a look at the candles over the last couple of hours, I would be mindful of this maybe forming some sort of engulfing. We've got around about 38 minutes to confirm that. So if we can hold above the gains that we posted between 7 and 8 o'clock, then I think that would be quite encouraging, and maybe we can see higher prices. Steve and I have been using this Elliott wave tool just as a bit of an indication about where these wave counts can potentially end. Typically, markets move higher in 5 waves and down in 3. So if we look at this, we can see that on the hourly chart, we've got a 5-wave pattern here, and this is suggesting that we are in the 5th wave. So sometimes the 5th wave can extend higher than the 3rd. But we could be in this 5th wave at the moment, which is suggesting that may end somewhere around here, but definitely could extend into these levels up here before it does correct. So just be mindful of that as well. And to be honest, if we do get a pullback here before reaching those targets, then it may be we just get a nice pullback to test this newly formed support before potentially a further rally to the upside over the short to medium term. Hopefully that was useful. Have we got any other requests on the currencies? Sterling
We
yen
had sterling
and
yen
dollar
and dollar
CAD.
CAD, yeah.
I went through dollar CAD, not a lot happening there. Was my sort of overview from that. Just quickly go back to that daily chart. Pretty range bound stuff. Arguably completed an inverse head and shoulders here, but it's pretty sideways, and stiff resistance between 136.82 to 137.00. If we take a look at sterling yen, now I know Ali, who's requested this, has been asking about this for a while. So I hope, sir, that you are long, because this has really started to motor onto the upside. It completed a bottom pattern here on the break through these multiple resistance levels between kind of 161.68 to 162.33. Saw a nice pullback into those levels, which provided an opportunity to buy. We've now also broken this sequence of lower highs. So I mean, we are still in a sequence of low highs, but we've kind of broken through that short-term downtrend, and potentially now heading towards our next target on the upside, which is 165.72, which is the 61.8% fib level from this high in October down to this low in January. So sterling holding up really well, obviously benefiting here against the yen weakness that we're seeing, but all in all, this looks pretty good. Let's take a look at the intradays to see what's happening here. So moving higher in 5 sequences, 5-wave sequences, we can see here wave 1, wave 2, wave 3, now in the process of making wave 5, and we're taking out the previous swing high that was posted yesterday around midnight, and looking pretty strong here, but a short-term reversal cannot be ruled out because it has had a pretty decent move to the upside in a very short space of time. But all in all, sterling yen looking pretty good.
Nice one, Joe. Thanks. I'm going to take a look at indices now. We'll start with FTSE. A little bit of a turnaround, it feels, in the indices market. If you look on the right-hand side here, it's all pretty negative at the moment. Well, that one isn't, so we'll get rid of that. I don't know what that was, CBOE 250 or something. I don't know. Yeah, looking pretty
250.
Oh, all right, okay.
That's actually a better indicator for the UK market rather than the FTSE 100.
Yeah, but the FTSE 100, I like it.
Okay, fine.
So
stick with
that's
it
what
then.
we all talk about. Well, I don't like trading it because I'm sort of like, it's one market that I've never managed to sort of like make any money out of. So yeah, it seems to sort of like have its own little heartbeat. Let's just leave it at that. So FTSE UK ex GBP, they're all down. Everyone's down, sort of like looking pretty negative at the moment. After, well, if we look at the daily chart on FTSE, we had, well, across the board, we had a pretty decent rally yesterday. Sort of like looked a bit more positive, but overnight we've just engulfed all of the gains yesterday, and we're looking at really support coming in at 78.70, 78.50. 5th wave, now we're in the ABC correction. potentially. If this is the end of the fifth wave, that's what we're looking at. We did put this marker on here saying that's the most we would expect it to go if it was the fifth wave, and it's stalled in front of that and starting to correct. DAX, same sort of price action. Looks like it indicates here that fifth and final wave is potentially complete, and now looking for an ABC correction. Support coming in around about the 15 to 40 level. Price action again yesterday seemed to do a decent job on pulling back the gains from Friday, but sellers have come in the game. Turnaround Tuesday, we may call it. EU 50, I'm looked at this and I'm bearish of this, not only because of the Elliott wave, but also I'm quite interested in this because I used it as a gun-to-head trade the other day, and potentially are we setting up for a little bit of a head and shoulders formation up here? Are we setting up for that? Maybe. Let's see how it plays out. Really, support coming in around about 4,165. A break below there should open up and should confirm that head and shoulders top. And think the Elliott wave tool is working hard to show us that fifth and final wave complete. On the US indices, we're potentially looking at, I'd like to sort of like maybe have this redraw it, because this could be, we could have actually hit the fifth and final wave. We might be in the ABC correction if we take this rally on the 1st of November as third wave, and then the rally up to the top here is the fifth wave. Then we're getting the ABC correction now. But let's see if the automated strategy is right. We've broken down below the cloud on the daily chart, so looking pretty negative here. Overall, the US indices seems to be a bit more under pressure than anyone else. And NASDAQ, again, similar sorts of question marks over where we are in the sort of cycle. And yeah, but we seem to have put this top in place, a potential double top with that neckline coming in at 12,200. We've rejected from a retest, so we're under a bit of pressure. 200-day moving average coming in around 11,900, so that's key. We've tested that on Friday and held, but really sort of under a little bit of pressure this morning, maybe looking to give up those gains and retest it again. And similar sort of price action for the S&P, again bounced off that 200-day moving average, but failed to sort of like really kick on Monday, and Tuesday's under pressure. So overall, feeling a little bit negative towards indices this morning. Turnaround Tuesday, as I say, it's always one to watch.
Okay.
Maybe we can go on to gun to head, Joe.
Indeed we can. So this is where Steve and I pick trade ideas live on the stream, as if we had a gun to our head. What would we trade right now? So it's highly speculative stuff. We are trading on a live basis. So since the start of 2023, we put £2,000 into a trading account just to try and mimic, I guess, the journey of a newer trader in financial markets, to see, the challenges that we face on a daily basis by actually putting your own money at risk. So the rules of the game are that we must pick a trade idea and place the idea at market. We must have stops and targets on all of the ideas that we come up with, and our risk reward ratios as a bare minimum must be 2 to 1 or better. So we're keeping track of these ideas, of course. If we take a look at how yesterday's ideas played out, we can just bring that up by going to our Signal Center profile. So we can see, I need to refresh this actually just to go back to its original state. So I was trading New Zealand dollar, US dollar yesterday. Looked as though there was a bit of a flag pattern completing, and there was a double top on the daily chart. Looking to sell that for a decent risk reward of 5.5, but sadly I was pipped out by that little spike there. You can see.
That's annoying.
Very annoying. I mean, it didn't come 9 o'clock. I probably still would have been slightly offside, but yeah, frustrating nonetheless. But that is, the risks and perils that we face when trading. So I was stopped out there. Steve had a trade idea on silver, and you were selling silver. Is that right, Steve?
I was selling silver, yes.
Yeah. So silver slipping lower was the title of the idea. And if we zoom in there to see Steve's setup and click the play button, we can see that only minimal amounts of drawdown were seen by Steve, and at the 9 o'clock close, you were onside by 1.28R. So yesterday we made money overall, even taking into account my losing trade. So that will do. We can see obviously that's continuing to grind lower. So it could have been a nice one to hold on to, but we close these ideas out at 9 o'clock UK time just because it resets everything. It means we don't have to pay any overnight fees as well. So that's another consideration to take into account when trading. So, Steve, we've got to go again today. What are you fancying, if anything, at all?
Yeah, I'm sort of like negative, obviously, on indices. Shock, horror, everyone shouts. We're in the middle of this ABC correction on the hourly chart, but also on the daily chart. Here it sort of decided to. So if you look at these last three candles, pretty negative. The bearish outside candle, the hanging man candle, and we're on our way this morning. So for me, we're potentially topping out on the indices, and I love things like that. Breaking down below the hourly Ichimoku cloud, down below the 4 hour already, so even better. So yeah, I'm going to. I've got to make sure select. Oh, there's my trade idea, Joe, from the other day. So it's sort of like I want to have another go at it, if that's all right with everyone. So the sort of thing I'm looking at, it's a little bit tougher, this one, just from a risk reward perspective. I mean, the stop up. I've missed the sort of like the 7 o'clock to 8 o'clock candle has done me over a little bit, but maybe we could sort of like look at a deeper correction today, just to give my trade idea a little bit more chance. But I mean, if we do take out this level here, we've got a head and shoulders formation as well. We can sort of like add to the mix. So I'm going to be pretty negative on this. Stop wise, yeah, pretty no, let's just go for it. Let's just put the trade on, Joe. Otherwise, we're going to see all that P&L slipping away. So 1% risk reward. Oh, are we logged out? No. Let me just double check on this. Why is it not? Oh, here we go. For some reason, it was showing a right. I'm not sure where my stop's going to be. 40 trading around 42.25. Let's give it a 42.55, something around there. Targeting a move to 41.70. What does that give us? Not really enough. So I'm either going to extend my target lower. Let's go for that, Joe. I'm just going to go for it. I've just whacked the button. That's it. I'm looking for a really sort of like aggressive target. For that to hit in the day would be a big old collapse.
We'd have to see something pretty nasty today, wouldn't we, for that to happen? We've
nasty.
got US consumer confidence at 3 o'clock, so maybe that could be a catalyst. Who
yeah,
knows?
anything. I'll take anything. I don't.
Yeah,
I'm
absolutely.
I don't really care
fussy.
what.
Well, I mean, within reason, right? We don't want to see like catastrophes, do we?
No, I'll just take anything for the market to move down. Of course, we wouldn't want to say that. Wouldn't want to be celebrating catastrophes. What do you think we are, heartless?
Yeah, exactly. That is not us. Right. Okay. Let's. Good luck with that, Steve.
Cheers.
So I've got to try and find something now. And I'm really struggling, if I'm honest. A few bits maybe interesting me. Dollar yen, maybe one of them. Just kind of looking at this from a perspective that it maybe is running into the end of a fifth wave here on the hourly chart. Just take a look at the daily to see if anything matches up. So we're into a 38.2% Fibonacci retracement level. On the daily, I mean, that's still got potential to work as a resistance level. So I'm not going to waste any more time. Let's just get on with it, shall we? Let's have a go. I've got a black line drawn on there as resistance. So let me just scroll back here to see why that's relevant. Those generally the sort of levels that I like, where you've got a kind of candle wick untested, and shortly after that you get these big impulsive moves down. So I think a retest of that level could be a decent area for me to get short. So I'm going to sell dollar yen at the current price, Steve. The way I've got my stop loss on here is actually taking the ATR for the last 14 days and applied that on top of this doji candle that's potentially forming on the hourly. So it's only a 20 tick stop, tiny really. So I really need this 38.2% fib on the daily to do a job. So I'd like to sell it there with a stop at 137.05, if I may, Steve.
137.05 stop. Targeting.
If this is an A leg pullback or correction, then there's multiple levels there to potentially target. I'm going to go kind of in the middle of them into this previous high here from the 23rd of February, which is at 135.36, which gives me a risk reward ratio of around 3.5 to 1, I think. Can you see that?
Yeah, does it?
It's a 7 to 1. Stop 137.05.
Yeah, that's what I got.
Target
134. 134.36 or 135.36.
135.36 is the target.
I had 134.36. 4.25 I've got here.
Yeah, because it's just moved a little bit higher, so that would do.
Yeah.
Yeah, really need that level to work immediately. So quite possible that that will move very quickly, either into profit or towards the stop loss. So from a risk reward perspective, quite happy with that. We are both risking 1% of trading capital on these trades. As you can see, our balance there is 1,860. So we are down around £140 from where we started, and obviously keen to reverse that pretty quickly. And one of these trades come in, puts a serious dent in that, and we are pretty much back to where we started. So
two of the trades come in, Joe. We get back to flat and we just stop.
Yeah, take the money back. Too emotional, isn't it?
Yeah, too emotional.
Right, okay. Day ahead. So as mentioned, we've got consumer confidence at 3 o'clock today. Let's just bring up the events. So we've got 3 o'clock US consumer confidence. Overnight, we've got Australian consumer prices. So that's monthly data that's due out. Another read on inflation, this time obviously in the Asia Pacific region. So let's see what impact that has. Do be aware if you have any Australian dollar exposure, or probably New Zealand dollar as well, because the two are reasonably well correlated due to the links they have with commodities. So keep an eye out for those just after midnight UK time. Then tomorrow we have the US ISM manufacturing index and the services index 2 days later. We should have non-farm payrolls as well this month, I believe, Steve, on Friday. Although we haven't got that flagged up on the calendar. So typically it's the first Friday in the trading month. Not sure if there's any change to that.
Yeah, maybe they've just forgot about it.
Maybe. It would do us all a favour, wouldn't
it? Yeah, we'll see. We'll double check that. Normally it's first Friday of the month, as you say, unless there's a holiday for any reasons. And then normally it comes out on Thursday, unless it's not.
Yeah, it's not out on Friday.
Wait, is it next week?
Yeah. Yeah, ADP out next Wednesday.
I suppose.
I guess because you've got the ADP as well, haven't you?
Yeah, short month. So
yeah.
As well. So February's like.
Weirdly, non-farm payrolls are out on the 10th of the month. This
maybe the
March.
sort of like the payrolls are so low that they need that extra week.
Trying to give it another week.
Up.
Yeah, maybe.
Such a conspiracy.
Steve and his conspiracies. Yes. Okay, right, guys. Thank you very much for watching. Thank you for participating. We hope that the analysis that we provided for your requests were helpful. We hope to see you back tomorrow. And in the meantime, have a great day.
Cheers.
Bye, everyone.